Our coverage continues. Let's dig a little deeper. Preet Banerjee is standing by in Toronto. He is a personal financial commentator. Your take on what we're seeing, this dramatic drop, and what does it mean, Preet?
Well, I was working out at the gym when my phone started to go off like crazy with all these requests to talk about what was going on in the stock market. And what I would say to a lot of people is this happens from time to time, and it's not something that people should be freaking out about. If you're thinking about your own investment portfolio, probably the best thing to do is not touch it. Don't do anything and stick to your plan.
For Canadian businesses, what should they take away?
Well, again, the fears that are being sparked are that there's inflationary pressure coming, and along with that would come a raise in interest rates. So we've been talking about an increase in interest rates for quite some time, and the rise in interest rates would increase the cost of borrowing. Now, consumption has been fueled a lot by borrowing. So if the cost for people to borrow money and spend that money goes up, that means that they would potentially spend less money. At the same time, for businesses looking to invest in themselves, they would go out and borrow money. That's one way to finance their operations. And if that cost goes up, then that means that their profits would potentially be getting squeezed. So this is the fear that a lot of people have about what these rises in interest rates portend for the future.
There is certainly a lot of conversation going on, and we've been talking to people throughout the afternoon about how, to a certain extent, this is normal. This is what happens sometimes. Your read on that, is this normal?
Yeah, so obviously it's not normal from a day-to-day basis, but certainly events like this happen from time to time, so every couple of years. And I think part of the reason that we're seeing this today is because the market has actually been doing really well for the last couple of years. And to a certain extent, there are a lot of people who have just been looking for any excuse to sell. Remember, when Donald Trump was elected, a lot of people were saying, you know what, this is going to get reflected in the stock market because of these policies that he's put forward on his platform. Well, that didn't materialize. So a lot of people have sort of been saying, well, when is that going to happen? And they've been waiting for an excuse. People have been talking about this increase in interest rates over a period of time, the level of household indebtedness that Canadians have. So there's all these sort of danger factors that people have on the top of their mind, but they've been waiting for an excuse. For some people, some of the selling activity is just them playing on these fears. So I would say to the person at home, though, is don't worry too much about this, because this, again, does happen from time to time. And most people's portfolios are not 100% exposed to the stock market anyways. They tend to have these balanced portfolios which have both stocks and bonds. So even though the market might be down 4%, your actual investment portfolio might only be down 1.5% or 2% on the day, which again happens from time to time. And the worst thing you can do is sell in reaction to being fearful.
Preet Banerjee giving us his take. He's a personal finance commentator joining us from Toronto. Thanks for this, Preet. You can go back to the gym now.
All right, thank you.